Hey, what's up guys? This is Mario from Trader Today, and today's video I'm gonna go over what we should expect for tomorrow's Federal Reserve announcement or FOMC meeting announcement regarding raising interest rates. All right, let's get started. So tomorrow, the FOMC or Federal Reserve will make an announcement regarding interest rates. They're gonna see if they're gonna raise interest rates one more time. Now, this is going to be released tomorrow at 2 p.m. Eastern Time, so the whole market, the whole world, or in other words, the whole investment financial world is going to be looking at it. All eyes on the Federal Reserve pretty much tomorrow. Now, the prior fund rates, federal funds rate target level is 1.5 to 1.75 basis percent, or 175 basis point, whatever is easier for you guys to understand. The consensus is 1.625%, and the consensus range is 1.5 to 1.75%. So pretty much no change in the federal funds rate target level. So which is perfectly fine, I guess. Again, last meeting the Federal Reserve did mention they were going to raise interest rate 2 more times this year. Again, they're going to meet. I believe they have another 5 more times or more to meet this year. So again, they don't want to do it. They don't want to raise interest rates all in one time. So remember that, guys. So now let's look at the probability of this being true. So to look at the probability of what the market thinks in terms of the probability the Federal Reserve is not going to change interest rates, I do use the CME Group FedWatch tool. And they even have a countdown. It's 16 hours, 9 minutes, and 38 seconds. So a real live countdown when the FOMC announcement is going to be, which is pretty cool, actually, because, again, all eyes are in the Federal Reserve. The Federal Reserve moves the market. So now let's look at the probability dates. The probability, now there is a 94.3% probability that they're going to keep the same target level, 150 to 175 basis points. So I guess nothing to worry about, which is good because, again, when interest rates do go up, it does tend to hurt the market. Again, it does tend to help the 10-year or the 30-year T-bills, which, again, hurt the market. So when the Federal Reserve not increasing interest rates, we're hoping as investors and traders that the market will hold these levels and bounce. So again, probability is 94% according to a CME FedWatch tool. So things are looking good. Things are looking very, very good. Again, this is S&P 500. It's been holding these levels, so that's really good. It's creating higher lows, higher lows. So you see this low, higher low right there, higher low, and this little nice hammer I actually really like. So that was nice. That was nice that the market did see some increased momentum in the close, which a lot of it has to most likely do because of the Federal Reserve, and again, they believe that the Federal Reserve is not going to increase interest rates. Again, 94.43% probably that they're going to stay at the same target level. Now, I wanted to show you guys this really cool, quickly, excuse me, because I think it's really cool, and it's a really cool tool from Thinkorswim. It's under Analyze tab. Look at the economic data, and this is the Federal Reserve fund rates. So this is real-time fund rate data. So if you guys can see right now, the federal funds rate is around 1.6. So and it's increasing, slowly increasing, guys. If you guys can see that. But so far, I mean, the Federal Reserve has been doing a pretty good job at increasing it very, very steadily, not getting too ahead of themselves. And it's good. It's good because it's not going to cause any severe reactions in the market, either the stock market or even the employment market. So looking good so far, guys. So I guess what we're going to do is see what happens. So again, if for whatever reason the Federal Reserve decides to increase interest rates, that'll be very unexpected. So if that does happen, then you have to be almost a contrarian. You almost have to be like, you know what, I may actually have to short the market when the Federal Reserve announces, because Again, the market is expecting 94% of no rate change. So if it does change their interest rates, that will be a huge surprise. So we could definitely see some very high volatility. But again, we'll see, so we'll see. And sometimes, again, the unexpected happens, So we're going to have to see and see how that plays out. So far, guys, we're doing good. The market's looking decent. It's holding. Again, tomorrow is a very, very big, day. And also Friday. Friday is going to be the jobs report where we're going to see unemployment numbers, and I'll have a video to talk more about that coming soon. So we'll see what happened, guys. All right, guys. So hopefully you guys learned something from this video, and you guys will hear from me soon. Have a good one, guys. Bye.